Ultimately, I think marketing is a huge component of attracting clientele to a property. It'd be silly. If you're trying to make money off marketing, you're in the wrong industry. I mean, if you're doing the right thing by your clients and you're achieving top results, you'll be making commission. You don't need to worry about making a few $100s on marketing.
All right, guys. Welcome, Michael. Slavko.
Thank you.
Nice to have you.
Thank you for having me.
This could go anywhere.
Slavko, Western Sydney
Slavko.
real estate royalty in the house.
Don't go anywhere. This could go anywhere.
No, thank you for coming.
Thank you for having me.
Slavko, tell us a little bit about yourself.
Yeah, sure. So offices in Double Bay. We operate predominantly in southwest Sydney, selling development sites in acreage. Been in the game for about 15 years now. And that's about it. Pretty simple.
You're just the best. That's it. 15 years. That's it. That's it.
That's it. That's all that counts.
That's it.
How'd you get into your line of work? What do you do exactly?
So my first job was in 2006. I worked for a home builder. They specialised in house and land packages. So built a database from there. Decided that I wanted to move to the eastern suburbs. Had enough of Blacktown for a while. Came to Double Bay and realised that the west is where the heart is at. So
You're still in Double Bay.
Keep going.
Still in Double Bay, but operating in the west. So.
Yeah. Nice. So you're selling a lot of development sites. We see your signs everywhere. A lot of the big development sites out in Western Sydney, Bringelly, Badgerys Creek. How did you move into that niche?
Yeah, so when I came to Double Bay, my business partner Anthony specialised in selling development sites in the eastern suburbs, primarily apartment blocks because there was no more land to subdivide in the east. I had already amassed a database of developers in the northwest at the time, so Schofields, Riverston, Kellyville Ridge. That was my hotspot when I first started. So we decided to put the databases together. Southwest Sydney is where I grew up. That's where the future was. So we started targeting Southwest Sydney. Got a couple of record results. Don't want to high note myself. A couple of record results. And one thing led to another, and that's pretty much now where we've primarily focused our core business on.
Yeah, because I've seen a few of your posts, and you definitely do mention the fact that you do get top dollar, right?
Yeah.
Don't leave that out of the
Don't like
post.
talking it up. But most of the suburbs.
But I'm very good. No, that's good.
Talk to us about the rezoning process, and just for the average person out there, how does like a Kellyville back in the day and a Box Hill now and Badgerys Creek, how does that get rezoned, and how do you find out that that's happening?
It's pretty much the state government. So the state government identifies areas that they want to build the infrastructure around. So with Southwest Sydney, the airport was the draw card. Once that was announced, there were 5-6 hotspots, primarily residential and industrial zoned suburbs that they identified on a 20-year plan, so to speak. Once that's identified, then they do a staging process. They get all their town planners, all the consultants in. They'll do flood studies, bushfire studies, infrastructure studies, and then they'll have a plan over whatever the period is, and they'll release that stage by stage. So it makes it easier for us because we have a core basis that we can work around, and that's pretty much all
right, so if you had to land bank, big question, if you had to land bank somewhere now, where would it be?
I like Rossmore. Rossmore is a suburb that adjoins Austral. The reason why I like Rossmore is because it is part of Liverpool LGA Council. It is next to Austral. At the moment, residential land, on an average, we're achieving 2.5 to 3 million per acre. Rossmore has been identified as a suburb that is future urban land, so it's also going to be a residential zoning.
So would you say this is something like Badgerys Creek 10 or 15 years ago, something similar to that?
Sort of. It was all identified at the same period, but because we sell a lot of land in Austral, I know what the potential is. We've got a lot of high results there. So at the moment, you can buy in Rossmore for about 1 million to 1.1 per acre, 1.2. In Austral, we're achieving up to 3 million per acre. So there's a 300% upside. Rezoning is imminent. It's just a matter of timing. And people say, yeah, but interest rates 6%, 7%. even if you're holding for 10 years, that's 60 to 70% that you're going to be paying in interest, but the upside is 300%. So from my point of view, it's a no-brainer.
Yep.
You're not influenced as much by the general market as you are by the rezoning process.
Makes sense.
Michael, tell your clients Rossmore it is, brother.
So Rossmore.
What do you mean,
Rossmore's the next
Brisbane?
hot spot.
Brisbane, please.
Yeah. So, but the problem is I won't be able to. Well, we've never actually done a deal, me and you.
No, because I want to get the best price. You're going to try undercut it. It's not going to happen.
I just want to cheaper. So can you name the agents I need to
You're going to have to tell them, I bought for a record price one of Slavko's listings.
We have to overpay. No. We can't stand overpaying. We're always looking to underpay.
Yeah.
So quite often the agents that we sell through are not the ones we buy through and so on. So if I ever get a deal
that's
that
why we work together.
Maybe you should drop your prices, Slavko.
Michael needs to come up.
Oh, see that?
He needs to
Typical
show
agents
value
or-
to his
agents or-
clients. The growth will out.
That's true. It's gonna grow, and my clients are gonna make money. But I still love a good deal, man. It's ingrained in who we are as buyers agents.
That's it.
But that's gonna bring me to another topic I want to discuss. We've encountered some agents recently. For a long time, we've encountered agents. We've encountered a few that overcharge on marketing, and I've got a suspicion that some of them don't use all the money for marketing. Have you encountered this in the industry right now, where there are agents that are probably charging a lot more than what the cost would be? So let's say realestate.com costs X amount, where they'd be charging over what it really is based on the current packages for realestate.com in that area. Are you seeing some of that happen with some of the competitors, or just in general in the space?
It's tough for me to answer. I mean, look, I really don't know what other agents are charging or what they're doing. I think they're doing a disservice to their clients if that's what they're doing. Ultimately, I think marketing is a huge component of attracting clientele to a property. It'd be silly if you're trying to make money off marketing, you're in the wrong industry. I mean, if you're doing the right thing by your clients and you're achieving top results, you'll be making commission. You don't need to worry about making a few $100s on marketing. So if that's what they're doing, I'd say that there's something drastically wrong with their business model.
Or the ethics.
It doesn't make sense.
Yeah, definitely.
So Slavko, your take, house and land packages.
Yep.
You probably do a little bit with that, maybe previous life or a little bit now. But what's your take on that? And obviously they do get a bad rep, but there has been some success.
They get a bad rep from us.
Yeah, they do.
The people selling them are always...
credit where credit is due. There has been some success in Leppington and places like that of house and land packages. Your take and your experience the last few years?
Look, house and land packages, there's a huge market for it. I find that there's a younger demographic that want to live in a new established area. There's new schools, infrastructure, shopping centres. People love seeing pretty things, brand new houses as opposed to your traditional established suburbs. We're finding that even land prices in these new areas are far out achieving the prices that you're getting in established areas. That just goes to show there's definitely a big market for it. Government keeps talking about the shortage in the housing market, which we can definitely see. There are so many factors and facets to this, though, where government says one thing, councils do another thing. So there isn't enough housing for the demand. That's what we're finding. It comes in sort of different phases where we believe there's going to be a lot more land released than what there is. And so I think that eventually there's going to have to be more infrastructure just to develop more of these suburbs.
With interest rates, with where they are at the moment, what have you noticed? Work slowed down or it's sped up? Are people fearing they're going to miss out?
What's the sentiment?
It has slowed down. I think people definitely rely a lot on what the sentiment in the market is, media, where you can feel it as well. Even development sites, land banking, people heavily rely on whatever is the current flavour of the month.
Even developers, even the top end of town, even people with money.
Would you say a high interest rate is sort of the land banking element is sort of being taken out because of that 6%?
It has. And I always tell people that are land banking, forget what you hear in the media. The reality is that the upside is that big. You know it's coming. So the government has announced this area will be rezoned. It will be residential or it will be industrial. So irrespective of the interest rate, if it's rezoned in 5 or 10 years, the upside of 200 or 300% completely outweighs the current interest rate that you're paying. So from my point of view, and this is why I believe that we do achieve good prices, is you need to show value. You need to explain to your buyer and your demographic that this is the future. You're not reliant upon the general residential or industrial market. You have the upside of the rezoning. So it'd be silly not to buy now and capitalise.
100%. And I'm just super surprised at how the top end of town and people with money that are land banking are swayed by the media. That is so surprising to me because, you know, by helping people set up property portfolios on the bottom end, $500,000, $600,000, $700,000 properties, you know, that we do here, we pay no attention to what's generally going on in the media, and we know it's all hype, right? And it sells papers, it gets clicks and so on. How the hell is the top end of town paying attention to the media? Hasn't anyone learned anything over the last few years about the media? What's going on here?
Look, I think to an extent they use it as a negotiating technique. So it's easy to say, well, did you hear what's happening? No, I didn't. First time. What do you mean the interest rates have gone up? But they do use it in their favour. A lot of people, it depends on your strategy. I mean, you're a buyer's agent. I'm sure that you give, your clients will listen to you because you'll lead them in the right direction. If your goal is cash flow, land banking is not the way to go because your return is minimal in comparison to the capital growth.
And that's what I think the problem is at the moment. The holding costs are so high with those interest rates. Even the big end of town is like, I'm just not going to touch that for a little while till I see what's going to go on.
Yeah.
So like moving forward, obviously with your experience, how do you see Sydney playing out? Now we have a lot of Sydney investors and they buy in, you know, Melbourne, Queensland, Perth, everywhere. How do you see Sydney playing out now? Obviously we've got National Park down south, we've got Blue Mountains out west. Are they going to go to sort of what they're saying in Rose Hill, a lot more, you know, high residential areas? Or are they going to keep unlocking land, you know, from here to Wollongong or to Goulburn? What's your thoughts?
I think there'll be a bit of both. The high density residential will happen. It's a lot easier. The property's already there. The infrastructure's there. Sydney Water has all the services there, sewerage, water. With land subdivision, it seems simple, but there are other things that need to come into play. Infrastructure, you need to get all the sewer pipes.
Roads,
it's all the things that require manpower, which at the moment has been an issue, especially during COVID. It's been tough to get labour to lay down all of these things. So I think there will be a lot more high density stock, but I do believe that ever since COVID, people do want land. So there's a huge demand for house and land packages and lots where people can have their own freedom. So I think that's going to be a strong market in the coming years.
Yeah, fantastic.
Yeah.
So obviously a lot of people now in Sydney are looking at other ways of, you know, trying to get money out of their property, whether that's building a granny flat, we talk about it all the time, Michael. People doing duplexes have been for a long, long time now. What are some of the roadblocks that council may have and the various, you know, LGAs? Is it getting easier to do this stuff on your own land or it's getting harder?
I think it depends on the area. The LGAs that I'm operating in are inundated with development applications at the moment.
Primarily for?
Subdivision, house and land packages. So I find that they'll take a lot longer to approve existing stock. They're getting a lot more money from the contributions of the actual land subdivisions. So they're focusing primarily on that. That's where their revenue's coming from. But there's definitely a shortage in housing. So they're going to need to sort of hurry that up and get more dwellings out there because we are seeing that the demand is definitely outstripping the supply at the moment. But because of infrastructure, there is still that lack of housing.
Yep, and rents are going up as well.
Yeah.
Right? So because of that demand, rents are going up. As rents go up, prices generally follow.
Yeah, definitely. Definitely. We're seeing that as well.
Yeah. So tell us, you know, with the way everything's getting so much more expensive, right? Properties are continually going up. How are a lot of the smarter, savvy individuals out there making money? Are they joint venture partnering? Where are they getting finance? Or obviously not everyone comes from family money. What are you seeing out there right now?
So what we're finding is there are a lot of community groups that are putting their money together to buy one land holding. Recently, we sold a property in Leppington where there was 30 members. They registered a company. They bought this block of land for 1.9 million, which everybody could afford the repayments. The actual income didn't matter that much because they were obviously taking only 1/30th of a share. They held the property for 3 years. We ended up reselling that property for 6.2 million. So we are finding that there are a lot of people bringing their money together.
That's actually a great strategy that never really gets talked about.
Yeah.
Yeah.
But that was genius
Yeah.
by
Yeah.
whoever came up with it.
Yeah.
And we're seeing that more and more. So they're not relying on banks as much. It's just community organisations or friends.
Like it was
Yeah.
back in the day
Yeah.
when
Yeah.
our
Yeah.
families first arrived.
And the good thing is there's that much, I guess, of a profit margin that it's worth your while. If it's just a standard residential property, then you'd be thinking, what's the point of splitting between this many people? But when you have such a big upside, it's a no-brainer.
And this was
Yeah.
just a block of land. So,
He had a little home on it.
okay.
Achieving
But as we
500
discussed before,
yeah.
they're splitting the holding cost, the high interest rate.
Correct.
And they're banking on this thing doubling, even tripling. And like you said, at that point, your 30th share actually means something when it's gone from 1.9 to 6 mil or
They
whatever
made
it
over
is.
300% return. And a lot of them had young families. They ended up buying a house and land package down the track. And
They
they,
could start
they
there.
had the capital to do that.
Yeah.
So,
So it gets them that start.
yeah.
Yeah,
It's a smart
very, very
way
smart.
of investing.
It's smart when these groups, these community groups, ethnic groups get together and they help each other, as
Definitely.
opposed to working against each other.
Yeah.
You know, helping, and they do it. But working together to achieve that common goal, as property gets more and more expensive, it's a good way for them to get in and get that start.
Yeah, definitely.
Going forward now with development sites and stuff like that, where do you think buyers agents and people in your space can start working together and benefiting, but also benefiting for the client?
Yeah. So in the past year, we've really noticed a surgence of buyers agents coming into the market. Up until about 2 years ago, we found that developers weren't using buyers agents much. They had their own internal structure where they would approach us. But now as it gets more competitive, there's more buyers out there. There's definitely more buyers agents. We actually just did a deal with a buyers agent last week.
Obviously not Pinnacle.
Nice.
No, these guys paid a
We
lot
don't
more.
overpay. We don't overpay.
Whoever they were, they got
Yeah.
fucking ripped.
They got a mad deal for their client. But the thing with the buyers agents, they were ready to proceed. So we had two buyers at the time. They were both roughly at the same level. The buyer's agent had the deposit ready, done their due diligence. They were ready to go. We love dealing with buyer's agents in the sense that they've got an educated buyer. They've already explained to them what the scenario is. If there's competition, they're ready to go. They don't want to miss out. So if they see value, we know that they will be transacting. So from our point of view, facilitating the deal, it's all about first in, best dressed, obviously best price, but we want to make sure that the deal is going to proceed.
Yeah.
And buyers agents have usually already educated their client as to the process. They know how it works, and it's a smooth transition. So
Yeah.
really fine.
They educate their buyers, and they look. A buyer's agent does not want the deal falling over, and a lot of times, an educated buyer's agent who's been around doesn't want to get that bad name. Right, they'll prep their client. They don't want to waste their time. I mean, what's there to be gained by wasting your time?
Yeah.
So yeah, super important to find a good buyer's agent. So I think with development sites, there is a lot more. You know, there's a lot more DD clauses put on, and those deals tend to fall over a lot more than regular residential.
Yeah, definitely.
Would you say because it's riskier to buy a development site over a site that's already got a house on it, and you're getting rent and you're getting...
I'd say there are a lot more elements to a deal. Town planners, consultants. We usually have a due diligence period where some money is put down, but essentially, it's a commercial purchase, so it needs to stack up. There isn't much emotion in it. You know, our role is developers are commercial buyers. They're usually educated. They know what they're purchasing. We're representing the vendors who may be farmers who don't really understand the whole process. So our job is to do the due diligence on their behalf, maximize the yield, show them what the value is, and then come to a median ground where it's fair for both parties. But essentially, that's what it comes down to. There are a lot of facets to the deal. It's not a standard.
The big guy always trying to screw down the little guy.
Trying is the key.
You're looking out for the little guy.
Then there's me. That's what it is.
How does negotiations normally go? Is it, obviously I'm sure you get pushback from both sides.
Yeah.
How does it normally end up?
Yeah.
It's fair or?
Yeah, I mean, look, there's no two deals that are the same.
That's true.
There are some deals that we tie up in an hour, and there are deals that last for days on end. So I think ultimately the key is to represent the client, do whatever you can to represent their best interest. And if it takes a bit longer, that's fine. If it's short, snappy, you've got the right buyer, you need to pull the trigger at the right time, that's what it is. So I always say, from my point of view, it doesn't matter how long it takes. It's about maximising the return.
But there's areas popping up everywhere, all over Sydney. Central Coast used to be separate from Sydney, used to be separate from Newcastle. Now, essentially, it's joined from Newcastle down to Wollongong. There's communities all along the coast, even inland.
Yep.
Do you have any sort of predictions where the next big sort of boom might be, or big land release where no one's really thinking? Is there a sleepy little coastal town and anything? Give us your crystal ball. Where is Sydney? What is Sydney looking like in 20 or 30 years' time? Where is the next Leppington or the next, Kellyville?
Look, I think the next Leppington is one of the adjoining suburbs.
Good plug.
It's Rossmore.
Rossmore. Look, I think all of these new subdivisions will be the primary hotspots for first home buyers and young families. The infrastructure's there. People no longer need to travel into the city for work. All these because there's a huge amount of industrial, commercial premises also opening within the surrounding suburbs, people will be able to reside there, work there, not have to travel out too much. So I do believe that the southwest, especially if, the Western Sydney Airport opening soon, will be the trajectory for in terms of growth. I really do believe that. And who knows what's going to happen in 20, 30 years, but definitely the next 10 to 20 years, I think that will be the hotspot in terms of growth. The northwest is still about 10-20% dearer than the southwest. So in my opinion, southwest always catches up. I'd be investing in the southwest.
Yeah, and just on top of that, I mean, they've put so much money into it, so much infrastructure, with the airports, creating jobs. It's essentially a no-brainer. That the way I see it going in 20 or 30 years, I just came back from Europe.
Yep.
I miss it.
How was that?
That was good.
Where'd you go?
Everywhere.
Yeah.
Everywhere I'm allowed in with the Macedonian passport. So about three countries.
2 countries.
Switzerland was one. The way I see it is, I think it's going to be more European style, where there's like mini cities, essentially, where you've got Liverpool is a mini city. Yep. And it's going to have everything there. Now that's got the airport, but it's got your businesses, it's got your central business district. I'm talking 30 or 40 years away. Then you've got your Penrith, then you've got your Parramatta, your Chatswood, Newcastle Central Coast. I think we're going to go more away from everyone having to travel into the CBD. I think it is going to become more like micro cities or mini cities where you can live in the Liverpool region or Leppington or whatever, and you've got everything in there. Like, they're already building that. That's the way they're going.
Definitely.
You've got, your super centres, you've got your parks, you've got your schools.
100%.
And if you can work from home, there's no need to catch the train in or drive into the city.
I agree.
I think COVID's changed the world. In this post-COVID world, everyone's using Teams and Zoom, and it's not like everyone's heading into the city the way they used to. 20, 30 years ago, everyone would be at the train station, and every 5 minutes you'd watch the train station fill out.
Yeah.
Train takes everyone 5 minutes, literally. Whole platform's filled up again, and and everyone just kept on going into the city. Now, so many of them, and that's why we're seeing a real resurgence in a lot of regional parts of the country and smaller sleepy towns all around. People are moving there. They're selling their big house in the city, and they're changing their lifestyle because they can now.
Yeah.
The world's changed forever.
Yep. I guess they're setting up, as you said, all the businesses from home, and that's the key.
Yeah. Online businesses, definitely.
Is there, with Southwest Sydney, is there still big blocks to buy in that Leppington area, or has it all been sort of predominantly gone now? It's all been divvied up?
There are. Leppington at the moment has a 5-stage release plan. So stages 1, 2 and 5 have been released. Stages 3 and 4 are yet to be released. They're proposing 2 to 3 years for that to be released. But there's still actually quite a bit of land in Leppington that hasn't been released. It's called the Catherine Field North Precinct. That's also a great area to invest in, guys.
Yeah, I read that. The second you were talking about it, I'm like, okay, got it.
That's my number 2 pick after Rossmore.
I'm surprised you didn't put your phone number on your head.
We'll do that later. But look, I do genuinely believe in what I'm selling, and it's not just a sales pitch. I do believe that there's such a big upside, and the way that we operate is we look at historical data. So suburbs that weren't released prior to 2014, before Austral and Leppington were released, you can literally check a year before. You could have bought 5 acres for 900,000. 2-3 years later, 6.9 million. And that's what we're dealing with in these other suburbs. So it's a no-brainer to purchase these blocks where you have such a big upside,
Yep.
where you can develop 40 to 50 blocks of land from one land holding.
Do you think, not that it's going to solve the housing crisis, because we know the answer to that, it's not going to solve it,
Yeah.
but those areas now opening to the side of Leppington, and we'll focus on that because of a lot of our clients are from Southwest Sydney, is that detrimental to their property if they've already bought in Edmondson Park and they've bought in those areas? Could they see a decrease in value once this new land's released in neighbouring suburbs? Or no, you think this will only help catapult the prices in these existing suburbs that have just been subdivided?
It will keep boosting the prices because more people speak about it. The more people speak about it, it draws in new demographic of buyer. I find it's like marketing. The more people know about a suburb, the more interest there is. So at the moment, a lot of people don't know about Leppington or Austral. They may have heard about Kellyville because Kellyville's been around for 20 years, but Austral, Leppington, future Catherine Fields, they're areas that will definitely keep growing. They'll be in the spotlight, and with the new airport coming up, you're going to hear about it more and more, and there'll be more buyers coming in, more competition, higher prices.
So now that the airport is how far away from opening?
2026.
2026. What are we now? 2024. We're getting there. Has there been interest from international buyers? Are they snapping up the land around it? Obviously, businesses need to open up around an airport. What are you seeing? What's been happening?
Definitely. There's been a lot of hotel groups buying enterprise land near the airport. We're finding...
They're putting hotels up at...
Yeah.
They
So
can just stay at Mick's uncle's house.
yeah.
He's got a
I'm staying there next week. 300 a night.
The Novatelovich, yeah.
We're finding that because obviously being an international airport, there's a lot of eastern suburbs buyers that are now contacting us wanting to invest as well. So there's definitely been a shift of your traditional investor from the southwest. There's national buyers, eastern suburbs, international. We feel that it's definitely growing in terms of interest levels and demographics changing.
So I've worked it out. So you basically moved from Liverpool to Double Bay to get those buyers to come back to Livo.
Yeah.
What a strategy.
Good job.
I needed to show them what they're missing out on. Before, like, where are you from? I'm like, yeah, now you know.
Good job.
In the eastern suburbs, they say...
No, now you know.
Do they know where Leppington
Pack
is?
them a
in the
couple of
eastern suburbs?
sandwiches, a couple of waters. And
But I had some guy from Bondi ask me, he's like, you're from Livo. He's like, oh, do you have horses and stuff?
Did you say yes? That's how I get to my...
Look, I'm not going to say what I said here on the podcast, but it goes to show sometimes that's the perception of what they think
definitely.
goes on out here.
Yeah.
Can't take a horse to Meriton.
Look, if you're...
You can.
At the moment, though, if you're going to Badgerys
done
Creek,
it.
you probably still need your horse, to be fair.
With the way petrol's going. Yeah.
How's the Chavapi in the eastern suburbs?
Is it choppy or not?
I don't know if there are any, I'll be honest. That's why I went back to Liverpool.
There's a new business idea for you.
Yeah,
There you go.
that's it.
So would you say more and more investors are heading to the southwest from the eastern suburbs, simply because the eastern suburbs has dried up, as in, the airport's full, Mascot's full, the east is full. They're looking for opportunities.
You can't really land bank too much in those areas. So
it's gonna cost you.
Yeah, it's going to cost you. So, but obviously, for the future, it's
I
it's
think-
the place to be.
I guess
Yeah.
smart investors know if there's an
Yeah.
airport being built, well, there's a pretty good chance that things are happening there for a long time.
I think the East traditionally, obviously, has been a blue chip market. Still is. There's still great growth in the East. But I find that a lot of investors from the East consider the Southwest to be a bit of a dangerous market to invest in because it was a bit of an unknown. But historically now we can say in the past 10 years that the growth has been exponential in the Southwest. And now that we have that data behind us, eastern suburbs investors that are educated are saying that maybe this is the way to go. And there's 20 to 30 years of potential growth there.
Yeah.
So it's not overseas buyers driving the price up, it's eastern suburbs.
I think there's a lot of money in...
I think the overseas thing is a little bit. I reckon just in general,
It's
the
blowing
overseas
out.
buyer. The overseas buyer has pretty much little to nothing, no
Yeah.
impact on.
Would you know
on
where to
property
buy
prices.
in Shanghai?
Not really. I've never been to China.
I don't think anyone in Shanghai is going, I'm going to buy in Edmondson Park.
I was supposed to go once, but my passport was expired. Well, let's talk about that. Like everyone's talking about overseas buyers coming over here and buying Australian real estate. They're not stopping, or they're not stopping Australians from buying real estate, and they're not driving the price up. It's such a small, insignificant amount. The problem here is that there's a lack of new dwelling approvals. There's a lack of new stock coming to the market
Migration
to
is
service
high.
the amount of demand, and that's coming from migration.
More people.
A lot of the migrants, the 600,000 migrants that came from overseas, they didn't all buy 600,000 houses. Okay, so I think the media has that big beat up on overseas buyers, and that's not really affecting the prices. The prices are the government letting in 600,000 migrants. There's simply not enough properties out there to help with demand, and especially in southeast Queensland, where we're from, you're seeing those markets just absolutely being snapped up by southern investors and southerners moving up. Mexicans we call them, right? So people from Melbourne, people from Sydney, all buying southeast Queensland because they want to live there and touch it. Going back to what we were talking about earlier, that post-COVID Zoom and Teams set up around work, they realise that they don't have to go into the office, that they can work from home. They can cash in their expensive Sydney house and they can come up and live a really, really good lifestyle. And there's only a certain amount of houses that are there for those, that amount of people. And that in turn is what's driving the property market. It's not so much, a couple of Chinese investers. I think that's a complete fallacy.
Hi to the Chinese audience out there. Thanks for all the views.
It's not your fault. It's the media.
Maybe we've got a business trip booked.
Yeah.
How are you seeing, to touch on, to expand from that, the higher migration, obviously, when people come here, they don't go live in Clovelly and Bondi and Coogee.
Yep.
They do come to the western suburbs in the southwest. Are you seeing that developers are cutting the land sizes? It used to be, when my parents bought in the early 2000s in the US state, 500, 550 was the norm. Then it became the 450, then it went to the 350. Are you seeing that it's getting lower and lower? Or
what's the smallest block sizes out there?
What are they selling?
Yeah. Look, ultimately, I think from a developer's point of view, the smaller the block, the bigger the margin. It's an affordability proposition where these areas have very low entry points, and I find that the lower the block, the more people can buy. In Austria, you can get a 270, 280 square metre block. Leppington have actually put in density restrictions at the moment for stages 2 and 5, where you can only put 30 dwellings on 2 hectare block of land. So
that's minimum.
They're about 420 square metres.
Oh, okay, that's good.
Because they want to keep the streets a bit, I guess, the density.
You can park your car.
Exactly, right?
And you can walk
Exactly
down the
right,
street.
yeah. So to answer your question, look, I think the smaller the block, the higher the per square metre rate, because it's more affordable overall.
No, that makes sense.
Yeah.
Fantastic. Slavko, thank you so much for coming.
Slavko, pleasure.
All good.
Appreciate it.